It's the TheoTrade evening video for June 28th, 2017. I am Don Kaufman. Let's take a look at markets today. We're still open with about 10 minutes left in the trading session. The S&P futures are up 18 with an astounding rally inside of the Nasdaq, up 80. Really, the first question that comes to mind, rip and rally or shorts reloading? Let's start with the S&Ps. If you remember back not only to this weekend, but specifically the Monday night video that we did, on that Monday night video that we did, we talked about a few levels. In fact, that was specifically what the Monday night video was about. It was about levels in the S&Ps. One of those levels happened to be none other than 2438. So one thing I want to bring you into perspective on, we're going to bring up a 30-day 1-hour chart here. And in this 30-day 1-hour chart, it's really astounding to see us coming back to specific and concentric kind of levels. When I say a concentric level, again, I'm not talking about, Fibonacci's over here, cycle brackets, nothing of the sort, okay? Risk centers in areas, okay? And we were talking about on Monday inside of the SPX. Now I'm relating the S&P futures now to the SPX. So a tremendous amount of option activity occurs in the SPX. That option activity, okay, then is hedged, okay? The SPX option activity here is hedged using the S&P futures. That means it's reduction of risk. Well, you get these kind of concentric areas where ultimately there's a huge amount of trading activity, all right, on both sides of the marketplace. And this has a lot to do with gamma risk. And there's going to be, again, both buyers and sellers are meeting. Well, one of those areas happens to be 2438, pretty much on the button. That tends to be the happy place for the S&P futures. Now, it is no surprise to see the S&P futures touch down to our previous level here of about 2411. Now, the level down at 2411 is not nearly as specific as the 2438. We got the 2438 pegged pretty solidly. Again, when you start looking at it on a 30-day 1 hour, like when we were kind of skirting along this level, and we're pretty much right on it here. Even if we close above 2438, don't look at this per se as support and resistance. Look at it as gravity. Okay, and the market is going to be pulled towards gravity, which is ultimately the happy place over here. When we start trading, okay, about 4 or 5 points away from these levels, that's when the market can start to break higher. And that's when, again, if we start to break to the upside, traders will go out there and continue to buy S&P futures to rally us. When we start to break to the downside, they'll actually sell into it. At this point, though, you can look at the 2438 as nothing more than this coin flip higher or lower. But it's wonderful on an intraday basis. I mean, again, if you look at today's trading session specifically, this 2438 is wonderful because we were talking about in the middle of the day, hey, if we're going to really start to rally over here, we're coming up right to 2438, which is exactly what we did. And it was only a short time, into the morning when the market started to explode a little bit higher. Now, allow me to move on to the Nasdaq, better known as Mr. Toad's Wild Ride over there inside of the Nasdaq. What can you say? Now, I have to stop and pause for just a moment, okay? And I don't want to be too backward looking, but respect the range. That's a range from 5630 to 5760. You're reading it right. I mean, we're throwing off, okay, astounding ranges inside these products. And when you start looking at this, 100-point, and again, this was overnight to literally right now. When you start throwing off 100-point ranges on days back to back, okay, let's actually look at this specifically in a 30-day 1 hour. And if you look at the last, and again, these dashed lines are day to day, right? So here we are, just what, at the beginning of the week, we're trading 58.50 all the way down to 56.50. People, it's only Wednesday. We trade from 58.50 to 56.50 back to 57.60. Okay, multiple 100-point ranges inside of the Nasdaq. So why mention it? You know, hey, great, Don, hindsight is 2020. I mention it because when you're looking at the range of movement, then you glance over at something like the VIX, okay? Think what you will of the VIX. If you missed it, the VIX is in single-digit territory right now. You start to shake your head, and you better believe that volatility is suppressed at this point. That volatility is, I mean, you got to look at it's just a caged animal. And I want to bring you back to, you know, I talk a lot about these expected moves, and this expected move, now I'm relating this to the Qs, right? The Qs and the Nasdaq obviously are joined at the hip. The Qs are the ETF version of these Nasdaq futures. If I relate this to the Qs, this is 1, 2, 3 trading days. Now, we're just going to go back in time for a moment. And I did a video on Saturday, and on Saturday I was talking specifically about the range of the Qs for the next, 6 days. It's actually 5 trading days. For the expiration that's supposed to come June 30th. Now, again, it's June 28th right now, but I'm just looking back to last Friday's session. The expected move for the entire week, the point is the expected move for the entire week is $2.30. It's $2.30. The Qs, okay, had that range today. They did beyond the range in one day what they were supposed to do the entire week. What's the point? Okay, the point is we've been buying QQQ strangles. Our TetraPod spread, not just the right place, the right time, it's working, okay? And it's working very, very well. We continually are seeing the Nasdaq exceeding expectations. That is, the Nasdaq is ripping higher or lower outside of its expected move. That continues to be a net buy of premium for us. And again, we're seeing wild moves on a day-to-day basis. And just to put in perspective, here's the trading session, including overnight, inside of the Qs. And the Qs are actually trading 137 all the way back up to 140. That's if you include some of the overnight trade. That's a $3 move. Now, granted, options are not open in the overnight trade. That's okay. We went out, we just bought options last Friday and held them, okay? We exited the TetraPod spread yesterday. And the TetraPod spread was a QQQ strangle. We purchased a QQQ strangle, okay? And at the same time, we sold a spider iron butterfly. Now, if you're into the spiders or you're into the SPX, the point that I want to make, the entire logic of this trade, I'm going to zoom out. I'm going to show you the expected move over here. The entire logic of the TetraPod trade is a very, very easy idea. We are selling premium here in the S&Ps. Why are we selling premium in the S&Ps? To help finance the purchase of premium over here in the Qs. The Qs continue exceeding the expected move. The S&Ps continue staying inside the expected move. Tremendous amount of research went into it, but building the strategy and timing of it really isn't that important. You're getting that huge movement in the Qs. All right, so markets are going to close here right on our number of 2438. We get that one right. Another area, okay, of kind of concern inside of just the last 2 days of trade, the bonds. And, you know, I've talked about being uneasy about the bonds because, frankly, we're getting Fed speak on a day-to-day basis. And when you listen, you know, you listen to people talking about bonds and so forth, everybody's an expert, right? You know, it's going higher, it's going lower. Listen, I've been bullish on bonds for a period of time, but at this point in the game, Dave, there's no question. I'm very, very uneasy about the direction of bonds, and what's making me uneasy about them, first and foremost, the volume is picked up. There's Fed speak out there, okay? I still think it's very, very relevant that bonds have the ability to rally substantially more. And the big question that I really have is when you see bonds rallying, and most recently they've gone from 145 all the way back up to the mid 150s, even the upper 150s in this case. Why are we buying bonds? We're in a rising interest rate environment, but the marketplace, okay, and this is the 30-year, clearly is in descent. The marketplace does not believe that interest rates are going to go up. So what does the marketplace believe if they're buying bonds? Does that mean eventually they're going to turn bearish in terms of the S&Ps? And I'm still going with that notion. I am still managing, okay, positions that are bearish, right? And yes, it's, holding bearish positions in the face of adversity and an 80-point up move inside of the Nasdaq is not easy. Nevertheless, okay, the bonds, have they made me a little uneasy the last 2 days selling off? Sure. However, if you take a look at today's trading session, look at the ZN, there's the closing bell, look at the ZN, okay? We're seeing almost record volume inside of the bond trade over here, and the bonds end up relatively unchanged. The reason I am mentioning the bonds, it's driving trade substantially inside of the financials. If the bonds do continue to sell off, it's giving a leg up to the financials, and it's going to provide support specifically to the S&Ps. A lot to think about, of course, tonight, and really think about that overwhelming kind of piece of logic over there. You got to decide. And in looking at these Nasdaq futures, this is no easy task. You have to decide in looking at this, again, is it a rip and rally, or, okay, is it shorts just reloading? And that means, is this just short covering that's going to be violently sold into in the next day or two? This week has not disappointed us at all. We talked about over the weekend on Monday, 100, 200 point moves in the Nasdaq, and it's precisely what we're seeing. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.